Okay, so we hear about the stock market all the time, right? On the news, online, everywhere. But what is it really? We're going to strip away all the confusing jargon and get right to the heart of what it is and how it actually works. So let me ask you a question. What if I told you that you, right now, could own a tiny piece of a massive company like Apple or Tesla for just a few dollars? I mean, it sounds a little bit out there, doesn't it? But here's the thing. It's not a crazy idea at all. In fact, that is exactly what the stock market makes possible for millions and millions of people every single day. That's what the whole system is built for. Now, for a lot of us, when we hear the words stock market, our minds immediately jump to some pretty scary places. We think of risk, of people losing money, maybe even that it's just a big casino. It can feel like this confusing, chaotic world that's only for Wall Street experts. But the reality is, if you can look past all that fear and noise, the stock market is one of the most powerful tools ever invented for building wealth over the long haul. And our goal today is just to understand that tool. Simple as that. So let's start with the absolute most basic building block of this whole thing. What on earth is a stock? We're going to break this down in the simplest way I can think of. At its heart, a stock is just a share of ownership in a company. That's it. It's basically a digital receipt that says, hey, you own a tiny little piece of this business. Here's my favorite way to picture it. Imagine a giant company is a pizza. Buying one share of its stock is like getting one slice of that pizza. Now, you don't own the whole pizza, but you for sure own that slice. It's yours. And this is so important to get. You're not just buying some flashing numbers or a little symbol on a screen. You are becoming a part owner of a real business, with its factories, its employees, its products, and its potential to grow in the future. Okay, so we get what a stock is, but how does that become a market? Well, it really comes down to two sides of the same coin. Why would a company sell pieces of itself? And why would anyone want to buy them? It's really a win-win. See, on one side, companies sell those little slices, those shares, to raise money. It's the capital they need to build new factories, invent new products, and just grow. And for investors, people like us, it's a chance to put our money to work and hopefully get a piece of that future success. Which leads to the big question. How do you actually make money? Well, there are two main ways. The first one is pretty straightforward. The price goes up. You buy a stock for, say, $10. The company does well, and now people think it's worth $20. You sell, you've made a profit. The second way is through something called dividends. This is where a company literally shares its profits with you, paying you cash just for owning the stock. It's kind of like getting paid rent on your slice of pizza. Of course, it's not always a simple, straight line to the moon. And this is where we have to talk about risk-reward and what's really going on behind the scenes that makes those prices jump around all day. Believe it or not, the engine behind all that movement is a super simple concept: supply and demand. If more people want to buy a stock than sell it, the price goes up. And if more people are trying to sell than buy, well, the price goes down. That's pretty much it. Now, on any given day, that supply and demand can look like total chaos. This is that up and down noise you see on the news. It's volatile, it's unpredictable. And honestly, this is the part that scares most people away. It feels like a total gamble. But watch what happens when we just zoom out. This is the exact same market, but we're looking at it over many years. All that daily noise, it just smooths out into a pretty clear upward trend. And that perspective right there is the difference between investing and gambling. So, is it gambling? Well, it can be, if you treat it that way. But if you understand what you're doing, it's something totally different. History has shown over and over that investors who think in terms of years and decades, not days and minutes, are the ones who usually win in the end. All right, so you get the big picture. How do you go from understanding this stuff to actually, doing it? It really just comes down to a few simple but really powerful rules to get you started on the right foot. Here are 4 rules to live by. First, don't invest blindly. Please know what you're buying. Second, start small. You don't need a pile of cash to get started. Third, always think long-term. Learn to ignore that daily noise. And finally, and this is maybe the most important, learn before you leap. Just make sure you can answer a simple question like, how does this company actually make money before you put a single dollar into it? And that last rule is everything. Because in the stock market, your most valuable asset isn't the money you have, it's the knowledge you have.
The time you spend learning upfront will pay you back way more than anything else.
So when you strip it all away, the stock market isn't a scary casino or some exclusive club. It's a tool. It's a powerful tool designed to connect growing companies with people who want to grow their savings. So the only question left really is, how will you use it?